Hey everyone, this is Terrence again, and going to take a little bit of a shift on Possess the Land today and talk about something that's important to all of us, well, to most of us, maybe, if not all of us. So it's the letter T. So I'm drinking a cup of tea, but T stands for something else today, not just my name, Terrence. It also stands for taxes. We're in the tax season. So, if you're like me, you're got some taxes to pay, or maybe you're waiting on a refund. So the question becomes, have you filed your taxes yet? Do you have all the information? So I want to talk about a few concepts. I don't profess to be a tax professional, even though I am a CPA certificate holder and I used to do taxes for other people. I don't do that much anymore. However, from the standpoint of personal taxes, let's first look at for those of us who, or those of you, I should say, me in the past, who work for a job get a W 2 because you get a W 2 from your employer and taxes are withheld. That's great. So you have an idea of what taxes you've already paid, more or less. And as your taxes are being prepared, do you prepare them yourself or someone prepares them for you, which is another point. If you have a complicated situation, it might be best to consult a tax professional, which might be a CPA, which might be a tax attorney or tax preparer who has the experience in the area that you need. Okay. Like if you're a real estate investor, you need someone that has some knowledge about the tax implication of owning real estate, for example, on and on and on. But let's say you work for your job. Let's start there, and there's taxes withheld. So one of the things, the decisions that all of us have to make, even with a W-2, is how much taxes we need to have withheld from our paycheck, our weekly pay, monthly pay, annual pay, whatever the case may be. Because you don't want to get to the end of the year and find out you had too little taxes withheld and then you got to pay. Or you really don't want to get to the end of the year and find out you overpaid. You sent more money in than you should have because you gave the government a free loan, and the government doesn't need our money freely. You should earn interest on that money by investing in someplace. So careful tax preparation is key and important. I'll be talking about this until tax day and maybe beyond tax day, coming on and just jumping on and having a brief conversation about taxes. But let's get back to the withholding tax. So I talk about if you are employed by someone who gives you a W 2, then you have taxes regularly withheld from your pay. But if you are an independent contractor, sole proprietor, or business owner, or consultant, and let's say you get a 1099, what's called a 1099. In other words, independent contractor, you did some work for someone and they sent you a tax document that should send you sometime in January, February that says, this is how much I paid you for the year, and no taxes were withheld. This is where it gets tricky because you can under withhold and cause yourself some problems with the IRS from under paying your taxes ahead of time, so forth like that. Excuse the language on that. Or you still too can over withhold. So careful tax planning is what I'm getting at here. Be it that you work for someone, get a W-2, or you're independent, you get a 1099, or you're just a sole proprietor and you don't get a 1099 and you have sales, you have expenses. How are you accounting for those things to make sure that you don't cause yourself a problem at the end of the year with the IRS? So in the 1099 situation, I've been down this road before as a fitness professional, consultant, those kinds of things, and I've received 1099 from various entities with no taxes withheld. So the key for me then was to make sure that I had an understanding what I thought my tax liability might be so that I'm prepared to either pay those taxes or pay those taxes as I gain income throughout the year. At any rate, I know one thing: I didn't want to get April 15th or whatever the due date was and realize I had a humongous tax bill that is problematic. So I think taxes are due April 15th still. I don't know what day of the week that is. So we still have time to do some planning. You still have time to talk to a tax professional if you need to, or do your research. One great source of research for me is just irs.gov. irs.gov. If you can't trust the information coming from the IRS, who can you trust? But if you don't have the tolerance or the patience or the background in accounting or finance like that, then consulting that tax professional could be critical. So another concept around these tax situations, since we're in the tax season now, there are there are situations that come up where you might wonder, okay, I'm in business, for example, and given that we're operating under the theme of possess the land, investing in capital assets, investing in real estate, so forth, there are lots of implications to that, making that decision. And as we get deeper into this conversation about taxes, I'm going to talk about those. But I'm going to keep it at the personal level for a second and at the sole proprietor business level a little bit to think about it like this. Have a plan, organize your documents, consult a tax professional if you know one. If you don't know a tax professional, there's CPA societies out there in your state. There are friends you might know who are having their tax prepared, like from entities like H&R Block, or there's a other one that the name escapes me at the moment, but then there's applications out there like Intuit, like TurboTax. I've used TurboTax for years. Now, I'm not endorsing TurboTax, so don't get me wrong. But if you are the do-it-yourself kind of person, have some knowledge, willing to do the research, it can be a good application to use. So planning, though, is the absolute key and absolute most important thing. Have a plan. Don't wait until it's a day before, the day of, and you realize that, oh, wow, now I have this liability. Now you can, I think one misconception that happens sometimes is you can get an extension to file your taxes. Well, getting an extension to file your taxes doesn't mean you don't have to pay. You still have to pay. If you realize that you owe something, it's best to pay if you can, even if you ask for the extension. The reason being is that if you don't and you owe something, the IRS can come back and charge you interest and penalty, and you don't need to pay interest and penalty to the IRS. You really need to make sure that you have that plan. So this video is just about a basic introduction to the whole notion of it is tax season. Have a plan, talk to a professional, and make sure that you have your documents in order. What I mean by documents is that throughout the year, you got income coming in, you paid expenses. So having some knowledge about that and good record keeping can save you a lot of headache and a lot of trouble on the back end as well. So again, I'm Terrence, and this is part of my presentation for Possess the Land today. I'll be back again tomorrow or later this week to talk about more about taxes and some of the implications and some of the things that all of us should consider to prepare ourselves for this tax season and beyond, because we're in 2026 and it's April. It is time for us to have a plan for 2026 because those taxes will be due in 2027. It's best to start at the beginning of the year, have a plan, follow your plan, adjust your plan if you need to. So thank you for tuning in again. Terrence Young, Possess the Land, and hope to see you again soon. And please, if you enjoy this information, share it. Share it with friends, family, whoever you know out there to get the word out. And I appreciate your support. Have a nice day.